Markets are strongly up this morning, and it seems to be about this. 𝐊𝐦𝐚𝐲 letter says it this way: breaking, Iran seeks talk with the U.S. and Israel, sending messages via Arab intermediaries to end the hostilities, according to the Wall Street Journal. Iran has also reportedly signals it wants to de-escalate hostilities with Israeli officials. And 𝐊𝐦𝐚𝐲 says the markets apparently knew this, starting 12 hours ago when the overnight started to reflect it. Mario Nawfal adds to it. He says, Iran ready to abandon enrichment if it can save face. A senior Iranian diplomat has told Iran Wire what many suspected, but no one had confirmed. Tehran is prepared to halt uranium enrichment, not out of goodwill, but to avoid collapse. Iranian diplomat says the real priority of the supreme leader is survival. We don't want to repeat Saddam Hussein's mistake. Israel strikes have shattered Iran's military command, scorched neighborhoods across Tehran, and pushed the regime to the brink. The diplomat warned that the IROC is losing control and morale is cracking. But Tehran isn't begging. It wants a deal, not a surrender photo op. And in a twist, the official named one man who might close it. Mr. Trump might be the only person who can end this quickly and peacefully. Well, okay, there you go. That's maybe why the markets are way up this morning. Oil is dropping, etc. Research from Bloomberg Intelligence, the terminal. Tesla's vehicle costs 1/7 of Waymo's. Tesla's full self-driving technology, while classified as level 2, like most other vehicles offering autonomous features, could be closer to reaching full autonomy than its peers. Tesla manufacturing capability is a core differentiator, as Waymo, who faces vehicle production constraints. No other incumbent in U.S., no other European car maker offers full self-driving capabilities on city roads. From the Muskonomy, Muskonomy. In China, Tesla has the strongest cash position and BYD has the weakest. You may have been seeing my reports over the weekend where BYD seems to be in real financial trouble. It says here that after paying off debt, as of March 31, 2025, Tesla has a positive 167.9 of billion dollars. I guess this would be in in Chinese currency. BYD is negative 242.7. Muskonomy says, what does this tell you about the future of EVs? Well, what it tells me is that whatever the future of EVs is, BYD is in serious trouble. I've been doing this a very, very long time. As maybe you're new, but I have worked with over 400 businesses during the last 18 years and have started over 40 of my own and written multiple books on small business, including books on business finance. Tesla is one of the best performing stocks of the last 10 years, up close to 2,000. This is according to the Motley Fool, up close to 2,000%, and crushing the broad market averages. The last 3 years have been more painful, still up 40% over the last 3 years. Tesla has trailed the NASDAQ 100 index by 88% cumulative return in the last 3 years, with struggles hitting the leader in electric vehicles because of market share losses, shrinking margins, and recent product flops. I don't know about any recent product flops. Do you? Let me know in the comments below. They're probably talking about the Cybertruck, but as far as I can tell, it is by far the leading EV truck, certainly in the over $70,000 category. Down around 14% this year, investors are beginning to doubt Elon Musk and Tesla stock again. This should have contrarian investors perked up as a potential buying opportunity, as most shy away from the once winning stock. Would buying Tesla stock be the smartest decision you make this year to bet against these doubters? Let's dig into the numbers and investigate further. Declining car volumes. The bulk of Tesla's past stock performance has come from the growth of EV division. Pioneering the industry, Tesla dominated new EV sales for the few years with its Model 3 and Y concepts, leading revenue to become close to $100 billion and operating income to soar past $10 billion. Now these figures are all moving in the wrong direction. Well, the overall unit sales for Tesla are right now soft. There's no doubt about it. Some of that had to do with the changeovers of factories over the January, February, March period, and we still don't really know where we are, but we will know a lot more in 2 weeks on the 2nd. So we'll see, where we really stand at that point. Right now, Troy Teslike is definitely showing that he believes that Tesla sales for the year will be closer to the 1.55 million level as opposed to 1.8. Last quarter, Tesla's total EV deliveries fell 13% year over year to 337,000, a trend that has occurred for many quarters now. Combined with falling selling prices, Tesla's automotive sales fell 20%, and total income from operations fell 66% year over year last quarter, wiping out a ton of Tesla's prior profitability. Over the last 12 months, Tesla posted $7 billion in operating income. That's down 50% from all-time highs. The trend in demand across China, Europe, and the United States seems to point to continued declines as well. Yeah, we're not 100% sure of that. We don't really know about China, and we also don't know about the United States. Europe, I'm agreeing, right now it appears very light, but that is also the smallest market. With delivery estimates falling and used Tesla prices dipping, while average used car prices rise, a forward indicator of demand for an automotive brand. Overall, Tesla's EV business in a terrible spot 2025, which is why investors are beginning to doubt the stock again. But Tesla is more than just EV sales. At least that is what Elon Musk claims. The provocative and showman leader of Tesla has been hyping Tesla's development of self-driving taxis, which means utilizing the camera sensors deployed on Tesla vehicles to autonomously drive cars for its customers. In the long run, Tesla hopes to build a self-driving taxi network similar to Waymo, although details are not clear today. What? Excuse me. Oh, first, Tesla needs to prove that this self-driving technology actually works. Elon Musk originally said it would debut a Tesla robotaxi on June 2nd. He never said anything of the sort, but has since revised that to June 22nd while claiming that the Tesla robotaxi will take a trip all the way from Austin to Los Angeles as well. When did he say that? I think that's complete bogus. While self-driving cars sound exciting, Elon Musk has been claiming Tesla's technology is close to ready for a decade now. A robotaxi network has huge economic promise, not to mention a giant value proposition for society in a way of safer roads and automating a boring and time-consuming task. Sign me up. However, we already have a leading self-driving technology, the Waymo network, with 250,000 rides weekly. It will take a Herculean feat for Tesla to catch up to Waymo. Can we write that down? Can we bookmark that? Can we keep that as a headline for about 2 or 3 weeks from now? Elon Musk may talk to them about the moon and back about Tesla's upcoming products, but we will still take this. That will still take the stock to new heights. The reality on the ground is much different. Cybertruck is a flop. Okay, that's what they say. I am burning money for the company. I doubt that's true. Optimus robots are years away from deployment. No. And self-driving technology has been a false promise for close to a decade. In the moment, Tesla is an EV manufacturer with falling sales, declining margins, and increasing competition. Globally, the stock is not cheap either. At $1 trillion market cap, Tesla has a price-to-earnings ratio of 178, which is pricing in huge earnings growth for a company, which is pricing in huge earnings growth. What? For a company that's going in completely the wrong direction. Well, 2 weeks from now, we will know a lot more, won't we? This is Randy Kirk. Hit like. No, I got to give the negative articles too. Hit subscribe, hit notify, regular programming today. Larry Goldberg around 4:35 o'clock, something like that. And then Brian White at 7:45. Business activity continued to decline in New York State, according to the firms responding to the Empire State Manufacturing Survey. The headline General Business Conditions Index fell 7 points to -16. This expected was down 6, so very, very close to expected. New orders and shipments declined, delivery times held steady, and supply availability worsened. Inventories, however, were little changed. Employment grew slightly for the first time in several months, while the average work week held steady. Input price increases slowed, but remained substantial, while selling price increases picked up. So business is lousy, but they're able to pass along their price increases. Maybe it's the reason business is lousy is because they're trying to pass along price increases. After turning pessimistic in April and May, firms turned positive in June, expecting conditions to improve over the next 6 months. The index for future general business conditions climbed 23 points to positive 21.2. New orders and shipments are expected to increase, and firms expect supply availability to be only slightly worse in the months ahead. Capital spending, however, plans remain soft. Well, that was a pretty good report, actually. Barron's, the contradictions between sunny economic data and softer sentiment readings have been a persistent feature of the post-COVID economic recovery. Many economists believe the University of Michigan's monthly index of consumer sentiment, the nation's best known and longest running sentiment survey, paints too bleak a picture of economic conditions. Catch up, guys. I've been saying this for months. You gotta come to this channel if you want to get stuff early, if you want to know directionality before the economists figure it out. Critics say the survey has lost reliability due to changes in its data gathering methodology and the underlying political bias of its respondents, which has weakened its utility as a predicting tool, which I've been saying for over a year. A year ago, I started talking about this Michigan survey being totally political, not only in the way that they were collecting their data, not only in the number of Republicans versus Democrats that they were surveying, but also with regard to the way that the content was even written. It was the way that they were the editorializing the information that they were putting out. Michigan's survey has served as a barometer of public opinion since 1946, and like other sentiment surveys, has long been used to predict consumer behavior, especially around spending. Since the pandemic, however, the correlation between sentiment readings and spending has broken down. Americans have continued to spend even as sentiment in these indexes curdled. Gross domestic product, about 70% of which reflects consumer spending, grew by 2.8% on an annualized basis in 2024 and 2.9% in 2023. Yet sentiment, according to the Michigan survey, has been dismal. The Michigan reading came in at 60.5% in the first 2 weeks of June, according to preliminary results. That's above May's reading of 52.2, but well below the 97.2 reading in December of 2019, just before the start of the COVID pandemic. Long-term expectations for economic growth and inflation measured by Michigan don't align with the current state of affairs at all. I'm adding a few words here and there, nor with even the worst case scenario when it comes to tariffs, which is what I've been saying for months, said Gregory Dacko, chief economist at EY Parthenon. Any economist looking at the data will have doubts as to whether these estimates could be taken at face value. No, not at all. Worthless, horrible trash. And but the markets don't pay any attention to NFIB, which is a far better way to be able to get a look at future business in the United States. Nationwide economist Orrin Claxton called the latest number more noise than signal. It's been more noise than signal for at least 2 years. This reading just shows the sensitivity of consumers to headlines. Yep, exactly what I said. Attitudes could just as easily retrench on negative news, he says. Even Federal Reserve officials don't seem overly reliant on the Michigan readings. Fed Chair Jerome Powell referred to the survey as an outlier in March, as sentiment fell dramatically and long-term inflation expectations measured by Michigan shot up to 4.1%. Joanne Su, the survey's director and chief economist, says she understands why people would rather not look at the ugly survey data right now. We're seeing really dismal views across pretty much every single segment of the economy, she says. Yeah, consumers are telling us something very loudly and clearly, she says, adding that such negative views shouldn't be ignored. Some consumers are so strong right now that they're not only their paychecks are going up on a real basis. They're saving money. Their credit card problems are purchases are going down, and the economy is increasing at over 3%. Some economists think changes Michigan made in its data collection have rendered the survey less accurate. Beginning in April, the Michigan survey began collecting responses via web-based questionnaires rather than phone calls. After running tests on this methodologies for 7 years. Economic researchers at Stanford and Yale found that online respondents tend to be more pessimistic than phone respondents. Fed Governor Adrian Kugler said in a speech last month that she takes seriously the concerns that recent methodological changes may have made the Michigan measure less reliable. Still, she called it a long-standing and important barometer. I think it's useless. Growing political bias among Americans seems to have caused some noise. It is well documented that consumer confidence reflects partisanship bias as well. Not only that, there was clear evidence 2 months ago, I reported it here, that the Democrats thought that inflation was going up at a rate of around 9% this year, and Republicans were at 1.5%. Republicans seem to be right on that, like everything else. Among some economists, the New York Fed's inflation expectations gauge has become a substitute for Michigan's survey because it draws from a larger sample of respondents. Also, it's a repeat survey, meaning that the same people are asked repeatedly about their inflation expectations. The Fed survey found that inflation expectations for the coming year were 3.2% in May, down 0.4 percentage points from an April reading and below Michigan's similar forecast for the year's gauge. 5-year expectations were 2.6% last month. According to the Fed survey, income expectations were up slightly, even as expectations for household spending growth continue to moderate. Economists will continue debating the merits of sentiment data versus quantifiable economic metrics, such as employment, GDP growth, and inflation. As confident measures swing, the debate about various sentiment gauges is likely to grow as well. All right, let's find out where the markets are this morning. Last time I checked, everything was really, really good. We'll take another look. Tesla is sitting around $329.45, up $4.14. or 1.27%. That is not quite as high as it was earlier this morning. It was as high as 330 in the pre-market. I think also just when it first opened, around 333. NASDAQ is at 155, so Tesla is underperforming right now. And the Dow Jones is up 1.16, S&P up 1.18 at 6,047. We are back to being less than 100 points away from all-time high on the S&P. Apple is sitting, the Magnificent Seven are all up, with Meta up 3% this morning. Don't know why. NVIDIA up 1.7%. And all the Cathie Woods are up, with ARK-K up 4.83%. So if you own ARK-K, as I do, you're doing pretty well on ARK-K this morning. Block up 3.90, almost 4%. All right, let's go take a look at the bonds. They were down earlier just a tad, and then they were up, and then they were down. Okay, down 0.9 of a basis point, 4.415. So that's interesting. Oil down $2.73. That makes it at 70.23. So looking to me like it will head back into the 60s if if the news stays as it is right now. Brent is still only $1 more, which is interesting. Natural gas up 2.26% at 3.662, fairly close to where it's been. Gold is down 38 this morning, so people not necessarily heading towards safety at 3,414. That's still a bit high. Silver, $36.43. That's up 0.22%. Again, looking like it might try to crash through all-time highs. Copper up 0.22% this morning, looking again, closing in on $5 at $4.83. The dollar is softening, it says this morning. Though, again, the numbers I'm looking at specifically, that was the headline. The numbers I'm looking at are mixed. Bitcoin is up 2,305, 107,000, close to all-time highs. So across the board, I would say that assets are doing well this morning. Even the bonds are up this morning, meaning, of course, the interest rates are down. All right, what's coming up this morning, later today? Okay, later today, you've got Larry Goldberg at around 4:35, somewhere around there. You got Brian White at 7:45. Yesterday night, all day yesterday. Well, okay, this week I don't even know which ones to pick. The information that I provided you over this weekend in 6 different videos was all, I believe, extremely, extremely valuable. In particular, nobody else, nobody's even picked up on what I've been saying yet. As far as I can see, that means they don't believe it. But as you'll see with Brian White tonight, he believes it. What we've got right now is I believe, a complete shift in the way that Elon Musk sees Tesla's future. I believe that this has been going on for 2 years. I believe that I saw it a year and a half ago, maybe even 2 years ago. I didn't talk about it at the time because I was concerned that it wouldn't be believable. But what we're looking at is we are not looking at a fight between ICE and electric cars over the next 5 years. What we're looking at is the end of personal purchases of vehicles. And this is going to be the end of the automotive industry before the end of the decade, maybe as early as 2028, as people stop buying new cars. They'll recognize that they're not going to buy another car ever. And so they will be stopping buying cars, and that'll be the end of car purchasing. I did 3 videos on that. Well, I did 3 videos on Saturday and some videos on Sunday. I'm just gonna, you know what I'm gonna do? I'm gonna give you the card right here for the first video on Saturday morning. Not all of those. I can't put 6 videos up. I'll just put that one up. That's where it starts. That's where the main core concept is explained. And you can wait till tonight, maybe when Brian White is on, and you'll hear it kind of there as Brian kicks back against some of the ideas that I have, but ultimately says, yeah, you know, seems like you're right, Randy. You might be off on your dates, but it looks like conceptually it is correct. So that's what you should do if you want to catch up on that. I think it's incredibly important. I think it gives an insight into what Elon is thinking and why a lot of things that are happening at Tesla right now, why they're happening the way they are. Okay, this is all I got for you right now. It's Randy Kirk. Oh, let me, one last chance. Take one last look at Tesla and see what it's doing. What we got is we have Tesla is sitting right where it was, 329.78. All right, that's it for now. It's been great talking to you.